Hi everyone, this is Jason Birack of Wall Street for Main Street. I just wanted to do a short video today since more of our listeners and subscribers to our YouTube channel want me to do short videos. I'm going to talk about some news stories, update on some markets. We're going to try to get this video like 15 or 20 minutes, which will be quite a bit shorter than our regular video. There was a news story that just came out today, really, and Obama's been saying now that there's very little difference between communism and capitalism. It's very frustrating to hear someone say this, especially someone so high up. I mean, he doesn't even understand what real capitalism is. But this should come to no surprise that he's showing his true colors, which are red and communist. If you go back before he was elected the first time, he had a biography out, and in the biography, he actually called the private sector, quote unquote, the enemy. And, basically he was saying, wealth redistribution and all this other stuff. So this should not surprise people. But as usual, the mainstream media didn't call him out on this. And, we have to go to InfoWars, which is Alex Jones's, to find any mention of this probably at all. He's Obama's background. He didn't really work any real jobs in the private sector. He was a community organizer. He took advantage of the way the system is set up, so he could, with bad grades and stuff, he could get into, even though he went to elite private schools in Hawaii and stuff, so he could get into, elite Ivy League schools with lower grades and things like that, and lower test scores. And one of the worst things he said, during his presidency, and this confirms, that he's a socialist or communist or just doesn't believe in free markets and capitalism, is he keeps repeating that you didn't build that stuff, saying that, if you built a small business, if you were an entrepreneur, if you taught yourself coding, or you added all these skills and built a successful business for yourself and a life for yourself, that the teachers and the people and the government who built the roads, they should take the credit for all this, a large chunk of it or almost all of it. So it's just very stupid. Obama's definitely not the first socialist or communist president we had. FDR was a pathological liar. And, he promised in order to get elected, he promised to lower taxes from Herbert Hoover and things like that. And FDR was, he tried to stack the Supreme Court and so many other different things. There's great books on how bad of a person and president and how bad for the economy FDR was. Murray Rothbard has one called America's Great Depression, and Robert Murphy has one called The Politically Incorrect Guide to the Great Depression and the New Deal. So I recommend checking out those books if you want to see the truth about some of these politicians. It's just very frustrating, though, to hear that we need more free markets and more real capitalism, not less. Now we have crony capitalism, which isn't real capitalism. We have too many taxes and regulations, and unfortunately, I think it's only going to get worse. The middle class is going to be grinded through perpetual 7 to 12% per year annual inflation, with taxes, Obamacare taxes, property taxes, car taxes. I just paid 10%. I pay 10% sales tax when I go out to eat at a restaurant, whether it's getting a burrito or, having a sit-down meal with friends on the weekends. It's just unbelievable the amount of taxes that are being layered on. And most people don't even notice or complain anymore. They're like George Orwell's Animal Farm. They're good little obedient sheeple. And, they blame capitalism and free markets for these higher taxes and things. But it's unbelievable. Okay, now I want to talk about the Federal Reserve. Obviously the Federal Reserve has decided not to raise rates yet. They said they reserve the right to maybe raise rates 1 or 2 times later in the year. If they try to raise rates at all, and originally the plan was, I think, with their data points to raise rates 4 more times in 2016 after their token quarter point raise. If they try to do that, something in the real economy, something in the asset markets is going to break. I don't know if it's the over-the-counter derivatives market. I don't know if it's a European or American bank, Deutsche Bank or an Italian bank or a French bank or another German bank or something like that. I don't know if it's going to be a large oil producer, but something would break if they continue to raise interest rates. And more than likely, all these large economies are going to have to go the way Keynes suggested, which was keep lowering rates to zero, even to negative rates. So we're seeing this with Japan. They're trying to devalue their currency. They're going to negative rates. Things are not working out as planned. Keynesian economics doesn't work. We've seen Europe try this a little bit, and they're going to attempt to do more QE, but obviously the market knows that the amount of QE they're doing is nowhere near enough. So yes, Draghi and the other people at the ECB we're going to buy this, we're going to do what it takes, but they're going to do small amounts, and it's not going to be enough to cover the derivatives losses of Deutsche Bank, the Italian banks, and others. And, we go down the list here. We can talk about the U.S. problems with this, how the U.S., can't afford higher interest rates. A lot of the reasons can't. Gordon T. Long says that corporations are going to come out rosy, even though they've been borrowing lots of debt and doing stock buybacks. I disagree with him on this. I think we're going to see the oil companies are example of this. They did a lot of stock buybacks. And yes, they didn't forecast the oil price going lower, but there could be a consumer company, a Warren Buffett type company that has more direct consumer sales of staples, and those sales could not be where they were projected. So the operating cash flow and the free cash flow could drop, and then the debt becomes drastically onerous. So we could have a situation like that. That almost happened to that basically did happen to General Electric in 2008, and they needed a bailout. So without a bailout, a lot of these companies would have already been screwed. There was over $19 trillion printed in 2008. We found that out with a one-time audit from Ron Paul that was featured. They talked about it on Zero Hedge. Ron Paul was only able to get a one-time partial audit. So we know that at least, and from my sources, from what I've heard, who went to the IMF meetings a couple years ago here in Washington, D.C., it's a lot more than 19 trillion that's been printed just to prop up the asset markets and keep corporations. So I don't think corporations, a lot of them are going to end up as rosy as people think, but that doesn't mean all of them are going bankrupt either. Yeah, so the Federal Reserve, they're manipulating interest rates. Every single government and their central bank and their Treasury Department, all the major economies and governments in the world are all trying to manipulate their interest rates and manipulate their currency and exchange rate. China's trying to devalue. I just read Kyle Bass's newsletter from February of 2016. I was a little delayed on reading it. I just read it a couple days ago, and he basically said that he thinks China needs to print $10 trillion worth of RMB to bail out their banks and other stuff to re-liquefy their economy and cover, losses in their banking system and losses at their municipality level and other level due to bad loans given out from central planning and misallocation of capital and things like that. So I don't know if he's right or not, although Kyle Bass does have a good track record. But if they do print 10 trillion, the RMB, the exchange rate of it's going to be pretty bad. And China's going to have really bad inflation problems. And I feel really bad for the Chinese people, the middle-class person in China who's trying to pull themselves up through the bootstraps and get some savings and trying to get into their middle class. But, so many of these central banks are talking about collusion nowadays. They're colluding with each other. I honestly think these guys discuss so many policy ideas with each other nowadays. Jim Rickards has alluded to this with his Pass the Canteen. He said it on his Twitter. And even Market Watch, which is a mainstream news website, they're very anti-gold. They're normally about dividend stocks and things like that. Even Market Watch put out a story this week talking about how central banks have colluded and gone to the U.S. Federal Reserve and said that they need to not make sure the dollar on the dollar index doesn't rise as quickly and, try to knock it down a little bit to give it a break. So it's just really amazing, guys. And then we have the zombie stock market. It's kind of like Weekend at Bernie's. Did you guys see that movie? I think it was popular in the 1980s. It was really hilarious. It was about this really rich and successful business guy. He was an asshole, and he treated people really bad. And it starred like Jonathan Silverman, I think, and Andrew McCarthy when they were younger. Andrew McCarthy was also in Mannequin, another 1980s movie. I'm dating myself, but it was a really funny movie. And Bernie was dead. And, they dressed Bernie up to pretend he was alive, and they got to stay in his beach house, and they used Bernie to get girls and things. It's a hilarious movie. I feel like the stock market is a Weekend at Bernie's, zombie fest, where the stock market is a zombie, and somehow, some way, it just keeps getting dragged, up. It just keeps getting dragged up one way or another. Plunge protection team, whoever is involved, exchange stabilization fund, whoever's involved in doing it. It seems like, the last couple times where the stock market's very close to crashing, something comes in and prevents it from crashing. But I don't know how much longer this can go on. Maybe this is the crack up boom, and, the asset prices are going to go sky high in nominal value, a la Weimar Germany or Zimbabwe or Argentina. When they had their hyperinflations, and Venezuela is on the verge, is having hyperinflation right now. So I think the stocks are basically having a bear market rally, a dead cat bounce, or a suckers rally. You can pick what you want to call it. The fundamentals of the individual companies, though, on Main Street are not very good. We have a strong dollar hurting a lot of earnings for a lot of these multinational corporations. A strong dollar is onerous to the developing world who has U.S. dollar denominated debt, and it's also onerous to the multinational corporations who have to report back in dollars because they're taking a weak currency and converting it back into a strong one. So that's going to hurt their earnings. They're probably going to go bitching to the Federal Reserve at some point if they haven't done so already. And there's evidence of so many restaurant closings and retail store closings. So if the economy was doing as well as people think, and obviously that's not the only reason these retail stores are closing, a lot of them are getting their butts kicked by Amazon, and they can't afford the higher minimum wage laws and so many other things. But there's just evidence that if the economy was really healthy in a recovery and was creating high-paying full-time jobs, the consumer would have money to go out to eat more at casual dining restaurants, better than Chipotle. They would have money for discretionary spending on clothes and other things like that, and we're not seeing a lot of evidence of that. Although the people at the high end, the asset price inflation crowd who have access to cheap capital, they are. Another thing I wanted to talk to you guys about was just talk about this rally that we've had in oil and copper and base metals and things like that, and it's gone along with stocks. Year to date, I'm at a chart right now. We've had a recovery. It was going down earlier, and then we've had a recovery. 1 year chart here. This is the Market Vector Oil Services. So this is like Schlumberger, Halliburton, Weatherford, some of the others. These guys are the ones who get paid to frack the wells and case the wells and things like that, and truck away the water. So these look like they were going much lower. See, obviously this is a 1 year chart. It was going lower, and then we've had somewhat of a bottom here, an attempt at putting in a bottom. But back to 2 years here, long-term trend is down still. But what I think, guys, is I think this is, just another dead cat bounce. I think it's another bear market rally, mostly short covering rally. I don't think the fundamentals are in place for a real guaranteed bottom in oil and also in copper. And here's the copper miners ETF chart, which is COPX, and this is a 1 year chart. So this is a pretty decent downtrend here. We've had a little recovery around there and back up. Let's look at the 2 year now. 2 year shows an even more pronounced downtrend, although, here's an attempt at a recovery. But what I would tell you guys to support my thesis that we haven't bottomed yet, this goes to listening to the Silver Wheaton conference call about copper and base metals. Silver Wheaton does an enormous amount of deals for silver byproduct with copper and base metal companies. I just listened to their conference call last week. So what I would say coming away from that is Silver Wheaton said they have copper and base metal miners going to them that they've never had contact them before. So what this means to me, and Silver Wheaton has done deals with a lot of copper and base metal companies, but what I think this means, though, is that there's no debt or equity available for a lot of the copper and base metal miners. And I think the three main guys are the largest ones. Who Silver Wheaton has never done deals before with BHP Billiton, Rio Tinto, and also Freeport-McMoRan. So those are pretty much the 800-pound gorillas in the copper and base metals markets. Vale is the other one. Silver Wheaton already has some gold streams, a couple of very good gold streams that they've extended on a Brazilian mine with Vale. But the other three ones, what that's telling me is I think we're going to see them because they have capital constraints, balance sheet problems, they have too much debt, they need to fix their operating cash flow, they need to cut their costs at the mine, they're willing to sell either some gold streams or some silver streams to Silver Wheaton in the near future. So I don't think copper, I think copper is going to go back down. I think we're going to see a lower copper price. We're going to have to see a good amount of bankruptcies and or mine shut. I actually read an article on Seeking Alpha a couple weeks ago, and one of the authors said he thinks that 2/3 of all copper miners could be bankrupt in the next year or two if the copper price doesn't, go much higher and stay there. So I don't think that's likely. I think China has been stockpiling copper, but I think that's just because they're trading off that they'd rather own copper 10, 20, 30 years from now rather than US dollars, and they can't put all their money into the gold market because there's just not enough physical gold without drastically driving up the price. Obviously, at a high enough price, there's going to be a lot of physical gold, but China doesn't want to rock the boat. They don't want the gold market going, to $3,000 in the next week or two or $5,000 in the next year. They don't want that type of spike. They want a controlled movement higher. Okay, so let me just check my notes again. Oil base metals, the TA is saying there's kind of a rebound here on the short term. The long term doesn't confirm it. I don't think the fundamentals confirm it either. We need to see more mines shut down, or in this case, oil wells. There's still a lot of oil wells, guys, the U.S. shale oil producers, that have been fracked already, encased, and they're shut in. So they're just waiting for a higher price to bring those wells online. What we need to see is actual oil producers, drastically shut down the production and or go bankrupt. So I still think we need a lower oil price to see that. Maybe I'm wrong. I was wrong about how deep the oil correction would be. So we'll see what happens in the near future, but I think this is a bear market rally for oil and base metals, and I don't think this is based on any fundamentals. The Silver Wheaton conference call I talked about. Silver Wheaton is a very good long-term play. They have very strong operating cash flow even at low silver prices. So they're in their balance sheet's solid, their operating cash flow is solid. I think they're in very good shape. They're in our 2015 review, 2016 preview. I think they're in a very good position long term. They're a very solid company, very well diversified with a lot of cash flow in different places. They have a decent amount of gold exposure and a lot of good silver exposure. And I think they're going to be opportunistic here. If they get a deal done with Freeport-McMoRan or BHP Billiton or Rio Tinto, it'll probably be pretty good. That should long term improve their counterparties even further, as those companies, have been around a very, very long time mining metal. Lastly, I just want to talk about the gold and silver miners. So I think with gold and silver miners, we've had a little bit of a pullback in gold and silver miners. Obviously the gold and silver price, the cartel is attempting to cap it, or, they're going to say that there's, profit taking here, blah, 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 blah. I think the cartel is involved. The bullion banks are involved in a lot of it. The high frequency trading is pretty easy to manipulate the paper markets for a while, but we're starting to see a lot of money. A lot of smart investors accumulate good stocks. Now, I won't say a lot of miners are able to raise money to build brand new mines. That's not happening yet. We need higher metals prices. But miners are able to get small amounts of financing done to fix their balance sheets or to do private placements into juniors. We're seeing some of that. And we're starting to see billionaires like Eric Sprott, who cashed out, made a huge profit on Lakeshore Gold. He helped turn them around. They had two mines, I think, that were running not cash flow positive, not generating free cash flow in Canada. He turned them around, made them, both of the mines, lower the cost, generate free cash flow, and then sold the company in a merger to Tahoe Resources. And Eric Sprott seems to be moving on to Mentnor Resources, which is one of the companies that Sandstorm Gold has a large stream with. So Eric Sprott has accumulated now about 12% of the shares of Mentnor Resources. Mentnor is an interesting company. They don't have a very large mine, but it could be optimized there. They could cut costs. They could increase production. They need a mill upgrade too. So it looks like Eric Sprott's going to help Mentnor turn them around and maybe raise more capital so they can improve their mining operationally. There are some good articles here about Mentnor if you want to read this further on Caesar's report. There's some good in-depth articles from a month or two ago explaining the operational problems at Mentnor, how it can be turned around, and their exploration upside. They're a junior though, guys. I think they're around 9 cents a share right now. The stock has gone up a lot. So this is a highly, highly speculative stock. Eric Sprott did put like $1 million or $2 million worth of his capital in, but obviously he can afford to lose that money because he's worth, either hundreds of millions, if not billions of dollars at this point. I think his net worth depends on gold and silver prices because he has so much exposure to them. So just to show, this was just to illustrate a point. I don't think Mentnor is the best company people should be buying. I personally bought more Sandstorm Gold on the dip this week. It dropped down back to $3.13 after being almost $3.50 US. So I accumulated a little bit more of Sandstorm Gold. Those types of companies, so Silver Wheaton, Sandstorm Gold, Royal Gold, those are the royalty and streaming companies. There's other solid miners like First Majestic Silver, Gold Corp, things like that. Any other questions, guys? Just send them wallstreetformainstreet@gmail.com. And a couple last pieces I want to mention for Wall Street for Main Street business before I let you guys go. We would really appreciate if you guys could give us some more 5-star reviews on iTunes. Really, really appreciate it. We only have 21 right now. Given the size of our podcasts on YouTube and iTunes, I think we should have a lot more. It'd be nice to get to 40 or 50. The best podcasts that are able to monetize and do this full time, they need over 100 basically. The ones who have over 100 reviews, they get a lot of sponsors and advertisers and they can monetize it. And, if you guys want to read the 2015 review, 2016 review, if you do not have a copy of it, it's 25 pages. Mo Dawood and I spent over a month writing it in December and part of January before we released it to you guys. I think there's pertinent information there and stock picks. Give us your email address. Sign up on our Wall Street for Main Street website, WLLSTFRMEINST.com. The last piece of information I want to talk about, well, actually, there's two. We're also looking for interns, unpaid interns, to help us around with some stuff. If you're interested, you can email us. Again, we're looking for a couple interns. We had one in 2015 who worked for a couple months and he decided not to continue. And the last piece of information is, we would like to bring in an experienced executive into Wall Street from Main Street. We're transitioning right now from just doing the podcast and consulting work and some of the other things we do. We want to keep doing those things, but we also want to bring in a more experienced business person who has some of the skills that Mo Dawood and I lack, who has more experience than we do, who has more experience running a larger business day to day, and have them, join the company with equity and help us raise the capital we need to implement the full business plan. So if you're a libertarian Austrian school and you believe in our vision of wanting to create an affordable investor and financial education website where people can learn the entrepreneurship skills, investing skills in different assets, Austrian school economics, how to build an online business, those types of skills on one website for free, shoot us an email and let's talk. We're looking to add an equity partner in here who believes in our vision, who believes in our business plan, and can help us pitch this to investors so we can raise the capital we need to develop the website we need so we can actually turn this into a viable 7-8 figure a year business. And I've spoken with other investors who have said, who I've showed our business plan to, they said it can be built into the business that we think it can, but it'll take a few years. So they're not willing, we've pitched a handful of legitimate investors. I don't want to name their names here specifically, but you guys know a number of them. And they said it was a good idea and we should keep pursuing it, but they wouldn't write us the check. And they said we should keep pursuing it, trying to find investors and things like that. But they passed on it because they said it would take a couple years after the capital was raised to get things up and running smoothly before, we got the business generating good cash flow and profitable and things like that. So we are looking for a potentially new CEO, provided he meets certain skill sets and experience and things like that, and he believes in our vision. We don't want a slick back guy who's just trying to get rich quick or things like that. We want someone who believes in the vision, believes in teaching the Austrian school economics and the different investing principles, and believes that students going to a regular business school don't need to pay $40,000 a year or more to get the skills they need. A piece of paper in today's economy doesn't matter a whole bunch. It's more about the skills you learn and things like that. So thank you for listening to this video. I really appreciate it. And everyone enjoy the NCAA tournament. It's been really crazy with all the stuff going on. I'm just watching right now, and later I'm gonna go watch hopefully Batman versus Superman. Either I'll see it today or I'm gonna watch the rest of the NCAA tournament tonight. I haven't fully figured it out. Okay, thanks guys.